This comment right here seems like it came from the kind of people who are following traditional financial advice. Maybe he's a financial advisor himself, and he tries to use all these gotcha scare tactic type questions like, what happens when your tenant can't pay back your bank loan? Well, what you should be doing is vetting your tenants to make sure that they can pay back the bank loan. For example, one of the properties that we rented out earlier this year is a couple in their late 50s, early 60s, and they have three sources of guaranteed income: two Social Security payments and a VA pension. So their guaranteed income is $8,000 a month. Their rental is $2,100 a month. So their rent represents just 25% of their guaranteed income. The second house that we bought this year is being rented out to a young adult. She's a college student, and she has a trust fund over $1 million. And that trust fund distributes to her every month her tuition, her rent payment, and $300 per month of spending money. And so we know beyond a shadow of a doubt that she is going to make her rent payment every month because she has the money to do it. And yes, we require that her trustee send over the statements for this investment account. And what if I can't find tenants to rent the house out to? I guess that's a possibility, but it's never happened to me before because I hire professional property management to source, find, and vet tenants and move them into the properties. When things break, I save money in cash value life insurance, this big money vault right here. When things break, I have plenty of money to pay for it. A couple of years ago, we did a cash out refinance of $120,000 on one of our rental properties. That was plenty to put on a new roof at that time and to save more than six figures, where again, most of it ended up going into one of these insurance policies that I use as my own personalized banking system to take care of any renovations that properties may need. And then finally, last question is when it declines in value, which it most likely won't happen because the real estate's pretty stable, but let's say that it does. I don't care because the rental income is still more than covering all of the mortgage balance. So if the property goes down in value, that doesn't matter to me because the cash flow provides about $2,000 a month over and above what the mortgage payments are. And at some point in time, the housing market would then recover and go up, and then I would be able to do a cash out refinance and pull more money out. These are a lot of what if questions. They are good questions and they should be addressed, and you should have a financial education before jumping in to any kind of rental property, buy and hold. Appreciate it, and I hope that these answers help people who are trying to learn more about real estate investing.